Good morning, good afternoon, good day. Welcome to my live market meeting 23rd December 2020. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and trade ideas on my channels, my website, YouTube channel and Twitter. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. From time to time, I may mention options, and today I will mention them a little bit more. I plan to show you how you may find what I think lucrative options verticals using Q systems and techniques. Those are high probability trades not only in terms of Q techniques but also in terms of options probabilities. I will use the live market to try to find some of those trades. However, remember that market is very extended. This may not be the best time to keep on adding new long positions, and the market doesn't have any weakness, at least as of yesterday. Didn't show enough weakness to take short trades. So this may not be the optimal time to take trades, at least too many trades in either direction. Keeping that in mind, I will demonstrate using live analysis how you can find lucrative options trading opportunities. As you know already, if you are following me on my YouTube live channel, that I am not inclined to take naked call or put options, especially not naked call options, because volatility and time decay both are against those trades. Sometimes I may take naked put options when the stock is at a very high price, because in those cases, though time decay is against the trade, volatility is in favor of the trade. However, in general, I don't like to take naked options positions. I would rather take verticals, which reduces the risk considerably. I'll explain how you can use Q techniques to identify probably lucrative options verticals. These are the Q systems I use in my live trading, and I will use the same systems in today's analysis as well. That was the last slide of the presentation. Let's start with the live system. First, let's have a look at the global markets. We start with the Australian market index AXJO. For the global markets, I am using the Q Global running on Metastock, because that allows me to look at not only the USA market instruments but global market instruments. I am using the default weekly daily at a glance template. In the weekly, we have a neutral backdrop color candle for the third week in a row. Prior 2 weeks had upper tails. The current week has a lower tail. That is showing indecision unless price can break out of the upper tail or the lower tail, the direction may not be clear. If you look at the recent weeks, then you may note that it is moving sideways. In the daily, it displayed a series of bearish headwind signals. Looking at that, long position holders may be cautious. However, there is a trendline support. Looking at that, I will avoid taking short trades as well. If you look at a longer term period, it is in an uptrend. If you look at a shorter term period, it is moving inside a box. That was Australian market. Let's look at Japanese market, Topix index. Somewhat similar. In the weekly, it is moving inside a range in the recent period. In a longer term view, it is still in an uptrend. In the daily, there was a bearish headwind. After that, it is moving sideways. Over longer term, it is still in an uptrend. Unless price breaks out of this range, the direction is not clear. China market now, CSI 300 index. Here the weekly backdrop color has turned bearish, magenta. In a longer term, it is in an uptrend. Looking at a shorter term period, it is moving inside a range. It has trendline support, therefore I am not going to take any short trade. Range bound and in the middle of the range, therefore I am not going to take any long trade either. Next, FTSE index UK market. UK market is similar to Australian market index in the sense that it is showing candles with upper tails and lower tail for several weeks. Over longer term, it is in an uptrend. In the recent period, it is in an uptrend, but momentum has slowed down. You could also say it is range bound because after displaying the bearish headwind, price could not go up. Now it is bound by a resistance memory trend line at the top and white and yellow direction line at the bottom. All these global markets are still in an uptrend. If you look at a longer term, in the most recent few weeks, it is moving sideways. The momentum has slowed down. The last global market we study is Nifty 50 India market. This was the strongest of the global markets and that is continuing. This week is forming a yellow color candle. Therefore, the backdrop color has changed from bullish to neutral. However, the shape of this week's candle is bullish. If you look at the lower tail. In the daily, in a longer term period, it is in an uptrend and in a shorter term period also, it is in an uptrend. Just after displaying a bearish headwind, price dropped sharply. However, that day ended with a lower tail, showing that at the end of the day, bulls came back in the market and bought aggressively. After that, for the last 2 days, price is slowly going up. Today, the traffic light candle color turned green. However, it is too close to the upper boundary. I'm not going to take any long trade now. If you look at the weekly and daily, this is continuing to be the strongest of the global markets. What about USA market? For that, let us use Q Elite running on TradeStation. Starting with S&P 500 ETF SPY. The weekly trendline support is broken now. Daily, one trendline support is broken. However, there is another trendline support nearby. As I mentioned in last several webinars also, if both of these trend lines are broken, then I may start to look for shorting opportunities. As you know, in last 1 week or 10 days, I did take few short trades. Those were in weak industries and in stocks with weak fundamentals. I shared at least 2 short ideas on my website sagarnandi.com, and both of them I could exit with a profit, though the market is still bullish. Why is it still bullish? Because SPY is still in an uptrend in the daily chart. My short idea still worked for me because I identified those shorts with Q technical setups. That of course has to be there for short-term trading. In addition, I shorted the stocks with weak fundamentals and also in weak industries. Those trades, which I call 360 degrees trades, where forces from different levels, all the levels are aligned with the trade, they tend to work much better than pure technical trades or pure fundamental trades. As you probably have found out if you are using Q systems yourself, or if you are following my ideas on my website, YouTube videos, or Twitter. What about QQQ Nasdaq 100 ETF? That is even more bullish than SPY. The weekly backdrop color is bullish and daily memory support has not been broken. DIA, this is weaker of the market ETFs. The relative performance is showing it is weaker than the other market ETFs. Also, the weekly backdrop color is bearish, and yesterday's candle color in the daily is also bearish with a bearish flow as well. However, the stock is moving sideways. When a stock is moving sideways, we are not supposed to apply the go with flow trend following short setup. Therefore, though it has bearish flow in daily, bearish backdrop in weekly, we will not apply the go with flow setup and will not try to short DIA right now. We'll just note that it is weaker than the other market ETFs, and if the market starts to drop, then DIA may be the best shorting candidate among the market ETFs. We of course have not looked at IWM yet, and here is IWM Russell 2000 ETF. It is strongest of the 4 ETFs shown by the relative performance steeply going up. This week's candle color is bullish, though the shape has turned to neutral, and in the daily price is going up sharply. The slope is the highest among the market ETFs, so IWM is the strongest. The USA market ETFs are not showing any weakness, they are very strong. What about the other Q views? If we use Q edge to look at the sector, industry and stock advance decline, then we can see from 1 month to 1 day yesterday's market close, or rather up to 2 days. If you look at up to 2 days, from 1 month to 2 days, the market breadth in terms of sector, industry and stock advance decline. The red portions of the pie became bigger, and yesterday, shown by the 1 day advance decline of sector, industry, stock, yesterday was balanced, slightly more bearish than bullish, but you may also say it was balanced yesterday. If you watched Q edge yesterday in real time, then you would know that market was very volatile. These three circles in real time, it would not show 1 day, it would show real time performance, and it was very volatile, turning between bullish to bearish to bullish to bearish several times, ending the day almost balanced, slightly bearish. But that is an improvement from the 2 day period score. Therefore, if you just looked at yesterday, it was slightly bearish. If you looked at the improvement from the previous score, then you would say that the advance decline is improving slightly. Again, over longer term, it was stronger. If you look at 1 month and then look at 1 day period, then it has weakened. If you look at 2 day and then 1 day period, then it has improved little bit. Therefore, the market could go either way based on this analysis. Market ETFs are very bullish. If we look at Q Finder, that shows the balance between bulls and bears. First, let's look at the weekly period. All signals for this week bearish. Strength signals also bearish, 91% bearish. Trend continuation signals 66% bearish. Reversal signals also 67% bearish. The weekly period is clearly bearish, and if we look at yesterday's finder, then it is bullish. 61% of all signals, 83% of strength signals, 68% of reversal signals are bullish. For trend continuation signal, it is little bit more bearish than bullish. 55% of trend continuation signals are bearish. Overall, it is bullish, 61% bullish. Therefore, weekly view is bearish, daily view is bullish. For short-term trading, we are going to rely on this change from bearish to bullish stance and look for buying opportunities. What I have shared in few webinars earlier is that the number of bullish signals or percentage of bullish signals coming at price extreme high is unusually large. Usually maximum signals, be it bullish or bearish, come in the price extreme middle. But in couple of recent periods, I have seen that maximum number of bullish signals are coming in price extreme high stocks. The bearish signals are continuing to come in price extreme middle stocks. That is usual for bearish signals. For bullish signals, this may be a sign of topping. However, we'll actually not take any short trade unless the market and the internals in terms of edge and finder and breadth studies are showing weakness, and unless the market ETFs can break the trendline support. Lastly, let us look at Q market breadth. Q market breadth using Nasdaq composite and NYSE composite. The composite indices themselves are bullish. These are weekly charts. If we look at new high low, Nasdaq very bullish, NYSE is also bullish. Advanced decline, again bullish, there is no divergence. Up down volume, Nasdaq is bullish, NYSE is bearish. If we combine all the signals and the indices themselves, we have to say that market internals are also very bullish. Thrust and jump are used to see if the indices are hitting extreme levels. That will be shown by red dots. Nasdaq doesn't have red dots. NYSE has red dots in recent periods in Q jump, but thrust doesn't have red dots. It's showing that market can still go higher. If both thrust and jump hit red dots, then we are cautious, and when after that red turns to yellow or green, then we may look for reversal trades. Right now we don't have that situation. The market breadth studies are also showing bullish picture. I'm going to now show two different techniques of identifying trades. One is for options trading. I'll come to that. Before that, let me show how these very powerful memory trend lines may be used to look for trades. Those trades may not be ready yet, but you may start to keep an eye on stocks at trendline support, memory trendline support, and buy them right at the point they are starting to go up. And you may identify them from Q Finder. You may look for stocks at daily memory trendline support, or you may look for weekly memory trendline support. Here in the weekly chart, we saw that overall the weekly picture is bearish. Therefore, it is likely some stocks have come down and maybe they are touching memory trendline support. Some of them may be starting to bounce up, but some of them may be just touching. You may look for possible buying opportunities from both of these touch cases as well as bounce cases, and using Q Finder you can look for them easily. I am clicking the bull icon to go to the bullish signals, and you can see here there are 27 stocks in my trading universe that are hitting trendline support in the weekly interval and 10 bouncing up. You may look for buying ideas from both of them. Let's try to look for the touching stocks first. I am putting my cursor anywhere on the column and flagging the signals. There are 27 signals. Now I am going to use these paint bars to look for stocks at price extreme low or medium or maybe even high. to see which stocks are touching trendline support. The stocks that are at price extreme low will of course be the most lucrative buying ideas even for longer term trading, because they are hitting trendline support while being at price extreme low, and even that in the weekly interval. So I'm going to click the red paint bar. Only one stock is there, and you can see it is touching the trendline support and it is also bouncing up from there. It is Easy Corp. Because it is only one stock, I'm going to open it with Q Global, and I'm going to change the default template to weekly daily. Usually I like to open multiple charts, and if that is so, I choose smart charts or Q default daily as my template, but today I'm going to use weekly daily at a glance to look at one stock at a time. It's up to a trader's preference if one wants to look at one stock at a time or multiple stocks at a time. Sometimes if I want to open multiple stocks at a time, then I use smart charts or Q default daily template only. And if I want to open one stock at a time, then I use the weekly daily at a glance template as my default template. Today I'm using weekly daily at a glance as my default template, and to open the chart I'm clicking the chart icon that will open it on Q Global on Metastock. If I wanted to view the stock on Q Elite on TradeStation, then I would use the radar or grid action button. Let me use Q Global now. Easy Corp. It is indeed hitting the weekly trendline support, touching it, also bouncing up from there. If you looked for the same candidates one day earlier, then you could identify the stock on this day. Yes, day before yesterday. Wednesday, that is Monday. At Monday's close also, or near the close, you would find Easy Corp, Easy PW, using the same technique. It was touching the trendline support in daily and weekly both, and it was bouncing up from them both, displaying a bull release signal, going up with bullish pressure. That was the optimal day to buy the stock. Using which unambiguous Q trade setup? Bounce trade setup. Bounce setup says that a stock has to drop sharply and suddenly, hit a pre-existing memory trendline support or a deep watermark level, both of which were true on Monday, and then price has to go up and close higher than previous day, which was true on Monday because the activity bar color is green. You could buy it at close of Monday, and the logical initial target would be the memory resistance line. Yesterday price gapped up. You might book some profit or you might continue to hold the stock. Now that is looking at technicals. If I was going to buy the stock on Monday, I would do that only if the fundamentals are strong in some way, either in terms of valuation or in terms of growth, and also if the industry was strong. Let's check that out. From Finder, I have Easy Corp selected already. I'm going to click the peer analysis button to check out the stock's fundamentals using Cube Vital. It's retrieving data from Reuters. I don't store any data on my computer. Everything is done in real time. While it is doing that and calculating the vital score, let's check out its industry, consumer finance from QH. It is not the strongest industry, it's not the weakest industry in terms of score. Base column is showing deceleration, that is as of yesterday. If we looked at Monday, then we would find it to be an attractive industry. So the pound signal came on Monday, barring the upper tail that we had to consider, but on Monday the industry was allowing us to buy. In terms of fundamentals, it is not up to my liking. In terms of fundamentals, I am looking for either undervalued stock or a stock with earnings growth. This stock had none of them, neither undervalued nor having earnings growth, no revenue growth also. Quarterly and yearly both periods are showing negative earnings and revenue growth. Valuation is not undervalued. Therefore, though the industry was allowing me to buy, though the technicals were allowing me to buy, I would not buy ECPW on Monday. And if you follow this discipline, don't take a trade unless all these levels forces are aligned, then I think your percentage of successful trades will go up. You may find that out yourself. So ECPW I wouldn't buy. In any case, I was trying to show how to look for stocks that are hitting trendline support, and you may find those from the weekly as well as daily interval. ECPW didn't give my 360 degrees trend, but the technique may be used for going through the other stocks. Let's look at some of the stocks at price extreme middle, and I flip to the price extreme middle stocks by clicking the yellow paint bar. Let's look at some of them. Let's look at them one by one, but I want to find out stocks that are fundamentally strong. I am going to send all of these stocks to QVita. One way of doing that is to highlight the stocks and click the peer analysis button. Other way is to keep the cursor on the symbol, this header cell here on the header cell, and click the peer analysis button. If you are highlighting the individual symbols, you may highlight up to 20 stocks at a time, and you may highlight them using different cells. Don't have to select only from the symbol cell. There is a limitation for performance reason. You may open or transfer up to 20 at a time if you are highlighting cells from the grid. If your list has more than 20, you may put the cursor on the symbol header and click either the chart or vital or grid action button. In this case, of course, I have only 12 symbols shown by this number here, so I could use both approach. Let me demonstrate how to transfer all symbols, be it more than 20 or less than 20. So I'm putting my cursor on the symbol header, clicking the peer analysis button. That brought all the stocks here. In this case, it happens to be less than 20, but even if it was more than 20, it would have brought all the stocks. QVital scorecard is calculated. Let's look at them. Let's look for stocks that are both undervalued and with earnings growth by using the 3-star button. Didn't find any stock. Let's look for single star stocks that are going to find either undervalued stocks or those with earnings growth. We have 4. Let me open all I'm not going to open all four because one stock went down yesterday. One stock was up by very small percentage. I'm going to focus on the top two stocks, that is BWA and INOV. What are these stocks? These are undervalued stocks shown by the valuation in cyan color. The scores are in cyan color. And if you look at the earnings growth in the latest quarter, for BWA, it is still negative, but it is improving. For INOV, it is positive but reduced. In some way, the earnings growths are okay. I am not going to choose a stock like this based on earnings growth looking at the numbers, but I am allowed to look at them based on valuation. So let's open these two stocks using Q Global. I'm going to close the existing stock first. What did I do? I first looked at stocks that are hitting trendline support. I wanted to find stocks hitting memory support in weekly. Now, instead of opening them first using technicals, I looked at their fundamentals, focusing only on fundamentally strong stocks. And I found two. INOV is one. It had a very sharp drop in weekly. Interestingly, right after displaying the bearish headwind signal, the bearish headwind signal could catch the very top. Beautiful and maybe even magical. After the sharp drop, it stabilized. The backdrop color changed from magenta to neutral, bearish to neutral, magenta to yellow. And this week is creating a bullish shape candle. Price tried to go below the trendline support but reversed with a lower tail, displayed a bull release signal. Looking at the weekly, it seems price will go up from here. If we look at the daily, that is also having trendline support. Price tried to go below the support on Monday but closed above with a long lower tail. If you are interested in buying the stock at the lowest price, you could buy on Monday's close, on this candle's close. However, there is a trendline resistance nearby. Therefore, I might not buy on Monday's close. I would look for the stock to go above the trendline resistance, and that may give a swing trade buying opportunity. That may also be a longer term buying opportunity looking at the weekly daily together. It is undervalued stock in terms of fundamentals, INOV. So fundamentals allow us to buy it. It will be a while before the stock becomes overvalued. Probably when it goes here, it will be medium valued and further above. If it can go above, further it may be overvalued. So we have the ability to hold on to the stock for a longer term period also. Of course, we didn't check the stocks industry. Let's look at that. INOV. I'm checking its industry from QH. Instantly, QH tells us that the industry is very strong. Healthcare technology. Therefore, INOV is giving us a possible buying candidate. I will wait for the stock to go above memory trendline resistance. That is how you may look for stocks at memory support in the weekly, or you might look for them in the daily interval also, and try to buy fundamentally strong stocks at probably the lowest possible price because it is hitting weekly trendline support. I'll not go through the other stock that we found. I was trying to demonstrate this technique. I promised to look at stocks that are giving possible options vertical trades, and I closed Q Finder because I have another version of Finder where I ran the weekly and daily Finder scans on a smaller list of stocks. This list of stocks, what are they? They are having very liquid options, very liquid options. And I'm going to look for buying candidates. The market is extended, but it is bullish, not showing any sign of weakness, not allowed to short. The ETFs have trendline support, so I'm going to look for buying candidates. So I'm looking at the daily bullish signals. Now let me use a different way to look for trades. I'm going to focus on the different trade setups first. QFinder shows trade setups as well as signals. The trade setups are in capital letter. These are breakout, go with flow, bounce, headwind, box. For most of them, you can find unambiguous checklists on my website sagarnandi.com. And lucrative opportunities may come from price extreme low. There is only one instrument at price extreme low, and that is US natural gas. That is not a stock. You could of course trade natural gas also using Q systems, but let me not look at that. Let me then look at the stocks that are at price extreme middle. Look at the trade setups. If we look at breakout setups, there is only one, Norton LifeLock, that is also giving a bullish flow signal. Let's look at the stocks one by one. And though, okay, let's look at the stock. Because I'm looking at them one by one, I'm opening them using weekly, daily at a glance together. This is a breakout setup because it is breaking out of trendline resistance in both weekly and daily. From the recent low, after displaying the bull release signal in both weekly and daily, it has come a long way. I am not fond of breakout trades, you know that, especially when the recent low is that far away. So I'm going to skip it. It is a breakout setup, that is what we looked for using QFinder, but I'm not a big fan of breakout trades, especially when the recent low is so far, so I'm going to close it. When I open the chart, you may note that the row, in this case I selected only one stock, one row was highlighted. What I usually do, because I have looked at this stock already and I decided not to trade, I press the delete key on my keyboard to remove it from my finder. So I'm left with the other stocks. Let's look for go with flow, trend following, trade setups, and I'm double clicking on the column header to sort by that column. It has a number of go with flow long setups, and among them, two of them are also giving pullback signal, and one of them is also showing bullish pressure. Let's look at that one first. Workhorse, it has bullish pressure, pullback signal, that is pulling back to the white or yellow direction line and going up from there, and a go with flow setup, went up by 12.7% yesterday. Let's look at the stock. This is looking interesting. The weekly backdrop color is bullish. The shape is also bullish. The daily traffic light color is bullish flow as well. The stock is in an uptrend with higher low, and it went up a lot from this last low. So we have to say it is in an uptrend. A stock in an uptrend pulling back to the yellow direction line, going up with bullish flow, while the weekly backdrop is bullish. That is giving a pullback to yellow going up, pullback signal, and a go with flow long trade setup. And yesterday it went up with bullish pressure, though the market was mixed at best. This is giving a proper go with flow long trade setup. If you look at the squeeze band indicator, then you can see it is also in a squeeze. This squeeze signal is useful when you see a series of red dots changing to yellow and then green. In this case, it didn't go to yellow, directly went to green, showing it was in a squeeze, Q's own calculation. Then it came out of the squeeze. To visualize the Q squeeze signal properly, you may switch to the volatility template. In Q Global on Metastock, I have set up all the templates that I use regularly on my menu bar. And if you are using Q Elite on TradeStation, you may use hotkeys to change from one to another template. Here I am going to look at the volatility template to visualize the squeeze. And now you can clearly visualize the squeeze from this squeeze indicator. It was inside a squeeze, and just yesterday it came out of the squeeze. You can see that from the candles, but the squeeze indicator on Q Global makes it very obvious. So this is giving a squeeze release buying opportunity as well. So technically it is giving a setup that I am willing to take. Let's check the stock's fundamentals. While it is retrieving data for Q Vital score, I'm going to check the industry strength, auto parts and equipment industry. Again, Q Edge instantly shows that the industry is strong from the color of the score, and it is also showing acceleration. Let's wait for the vital score to be calculated, and if the fundamentals are looking good, then we are going to look for a vertical trade setup. Let me set up TradeStation Option Station Pro for that. Okay, workhorse. I'll come back to the vertical setup. Before that, let me first make sure that the vital score is allowing me to buy. What did I do? I first looked at the finder signals on my work list. What is the work list? Instruments with very liquid options. In fact, these also have weekly options. I got this list from one of the Q traders. He wanted to transfer the ticker symbols to Reuters symbols. I helped with that, and I have the list now. So I thought of running Finder on this list of stocks. It has some ETFs also, stocks with weekly options, very liquid options. I ran Finder only on them. Then I am looking for buying opportunities. I found one, workhorse, go with flow setup, pullback setup. also coming out of a squeeze. Industry is strong. And let's look at the fundamentals. In terms of valuation, it is overvalued. Earnings growth in the latest quarter is also negative. However, Workhorse is in a unique industry. I cannot say unique industry, but it has unique technology. Very well known stock, and look at the revenue growth in the last quarter. Huge revenue growth. There was revenue growth, very large revenue growth, one quarter earlier also, but in the latest quarter, revenue growth exploded, has a short squeeze potential. And if you study the stock, I use icon for that. So I did that already. And Workhorse is a well-known stock. You may all know that. It has a nice technology. So I wouldn't mind buying the stock, looking at the revenue growth and knowing about the stock. So if I wanted to buy, I might use options. Now in Q technique for short-term trading, if you are following the trades or if you are taking the trades using Q setups, you would know that many of the short-term trades close within say 1 week to 2 weeks. If that is so, for vertical trading, you may not buy longer term options because the profit will not be reaching maximum, nowhere near maximum, even if the stock goes up. And why am I focusing on verticals? Because I don't want to buy naked calls. Naked calls have volatility against it. It has time decay against it. When I'm using verticals, then I am neutralizing the negative impact of volatility change and theta decay that comes with naked options, naked call options. So I'm going to use call verticals. The disadvantage of call vertical is, or you may say characteristic of the call vertical is, the maximum profit comes at or near expiry. So if my average holding period is 1 to 2 weeks, I am not going to buy longer term options. Now if you follow very much experts on options, be it from Thinkorswim or from Tastyworks, and Tastyworks has a team that developed the Thinkorswim platform. They are experts on options. They tend to suggest buying option structures, be it vertical or something else, with 45 days to expiry or maybe 2 months. Tastyworks talks about 45 days to expiry. That is fine because they are mostly not taking, or they probably don't know about Q trades. Q short-term trades tend to close within 1 to 2 weeks, and if that is so, there is no point trading verticals that have 45 days to expiry. Then even if our price target is hit, the profit is not going to maximize. And let me demonstrate that. Let's choose first 58 days to expiry. Current price is 23.65. So to make a call vertical, I am going to buy 23 strike, and now I'm going to demonstrate the Q technique of creating verticals. First, you click on the in the money leg, in this case 23 buy side. You see, when I hover my cursor, is showing buy on the right column and sell here. So I'm creating a long call vertical bullish trade on Workhorse. So I clicked on the in the money leg buy side. I am paying $4.70 for that, 58 days to expiry. Now there are many theories of options, but to make profit you don't need theory, you just need to know what to do. And that is what I'm explaining. I'm not going into theory. The theory is nice to understand, but not at all required to make profit. And probably what I'm describing makes most sense if you are using Q techniques. Click on the in the money leg buy side, check the premium $4.70. Now go further out of the money, stop where the premium is about half of what you are using to buy the call. So 470 half will be about 235. So I can see there is no 235, 270. So that's fine. I'm going to sell this leg, get credit for $2.70. Strike is 28. So I'm on trade station platform. I'm holding the control key down and clicking on the sell sign. So I have two legs now at the bottom. Buy 23, sell 28, both 19th February 2021 expiry, that is 58 days to expiry. At the mid level, I am paying $1.70. What is my maximum profit? Let's look at the Analyze tab. For that, right click on the option vertical, click on Analyze tab. And here it is showing the risk reward profile across different days. You may set up trade station like that. You may do similar analysis in other platforms also. Thinkorswim also you can do that. Here I have set it up so that the white line shows the PNL at expiry. So I'm going to not go into theory, show you exactly what to do. First you move your cursor to the left, read the maximum loss from the white line, and you can see that there is a pop-up showing different loss at different time interval. The white line is at expiry, that is showing maximum loss for me, in this case in $170. What is my maximum profit? Move your cursor to the right where this white line is flattening out. Read the profit from the pop-up dialog. The white line, white number, that is $330. So maximum profit in this trade is $330. Maximum loss is $170. That is very attractive reward risk ratio. Where is the maximum profit achieved? $28. Am I expecting the stock to go to $28? And that is where the Q technique and systems are coming together. I'm not using option theory to decide which leg to buy, which leg to sell. I am buying in the money and I am selling the leg that is giving me half the debit amount as credit. And that is giving me very attractive reward risk ratio. Now I want to know that my short leg, $28, is it viable? Let's look at the chart again. Okay, let's use trade station. The next trend line resistance is at 29.60. So 28 strike as short leg is certainly reachable. It's certainly reachable within 58 days. So this profit is achievable. $330 profit for risking $170. However, now it is important to look at the other lines. This profit will come only at expiry or near expiry, 58 days from now. But Q trades usually hit their initial profit target within 1 to 2 weeks. The orange line is now, the green line is the way I have set it up. 29 day to expiry. So this is actually half of the period. So even if half of the period goes, I will profit only this much. Half of the time goes by. When price hits my target, then I will get less than $100. If the stock hits target price 28, immediately I am going to get only $50. Whereas my maximum profit potential is $330. 327 plus 330 actually. This is showing, these different lines are showing that my maximum profit comes only at or near expiry. However, Q trades usually hit the initial target or stop loss within 1 to 2 weeks, and that is what I wanted to show, that there is no point if you are using Q technique for short-term trading to create a vertical with 58 days to expiry. 1 month is more suitable, and let's look at 1 month. I'm going to delete this vertical and create another, and this time using January expiry, January 2021. Again, I'm going to, again, not going into option theory. That will be great, but that will not help you make profit and not certainly help you create the verticals that I am showing. This is a fundamentally strong stock giving a technical setup in strong industry. I'm creating a vertical structure using options. I am clicking on the at the money strike again. January expiry 280. Which one do I want to sell? I am going further out of the money. See where I get half of the debit amount as credit, and I get that from 26.5, 140. Control click that. I have the vertical. Go to analyze. First look at the white line flat position. My maximum loss 125. Maximum profit, go to the right, 225. Again 125 maximum loss, 225 maximum profit. That is great. My maximum profit comes if price can go up to 26.5. Is it reasonable? Yes, we already saw that. We can reasonably expect it to go to 28, 29. So 25, 26, 27, of course. Those have to be passed before it goes to trend line resistance. So this target price is 26.5, where we'll have maximum profit is certainly achievable. This is 1 month expiry, but maximum profit will come at or near expiry. How many days to expiry? 23 days. 23 days. But green line is half of that. So if half of the time passes, we'll get more than $60. And if I think the blue line is 3/4 time passes, we'll get more than $90, about $100. And what was our maximum loss? Minus 125. So you may take this vertical, and after the vertical is filled, of course, when buying verticals, in general, when buying options, try to get the fill at mid price. Never, okay, I shouldn't say never, but for me at least, I never place an options trade at the market. Always use limit order and try to fill it at the mid price. As soon as we get the fill, Q technique is to place the order for booking profit on the vertical. Again, general idea is to book profit at, some people say 55, 50, 55, 60% of debit amount. Some people say half of maximum profit. So I suggest in Q technique, place the GTC order for 80% of max profit and see it every day at the end of the day. If it is hitting 50% of max profit, not debit amount. Why? Because the way I am structuring the verticals, my maximum profit is much larger than maximum loss, which is the debit amount. So I don't want to limit my profit to a percentage of the debit amount. I want to get a profit as a percentage of the max profit. And I'm not setting it at 50%, I'm setting it at 80% of max profit. Once the profit hits 50%, I'm watching. If the stock stalls there, I'm booking profit. If the stock continues to go up, in this case time decay is in my favor, delta or price move is in my favor, I'm going to hold it. Once it hits 80%, no point trying to hold it longer. The reward risk doesn't work out. Just to make another 20% of max profit, additional profit, we are putting 80% of max profit at risk. That doesn't make sense theoretically. So the 80% is good enough to book the full position profit. Let me revisit exactly what I did. I ran Finder on a list of stocks with weekly options, very liquid options. I looked at stocks one by one. Found workhorse with a good technical setup, go with flow trend following long setup using Q methodology, also a pullback candidate, going up with high pressure, also a squeeze release candidate, go with flow candidate. I checked the stocks detail, very well known stock in fact, in a unique industry. They have great technology. I am willing to buy the stock. QH showed the industry is strong. Then I created a vertical. For that, I would not like to go beyond 23 days or 25 days, uh, depending on what expiry is available. About 20 days to 25 days to expiry. How did I choose the option? First, I selected the at the money leg, bought that. I looked further out of the money, the leg which gave me half of the debit amount as credit, selected both of them, looked at the analysis tab, and you will find in most of the cases, the way I structured the vertical, my max profit is much more than max loss. Usually 2 is to 3 or 1 is to 2 risk to reward. That is great. 1 is to 2 or 2 is to 3, and I am going to buy it at mid price. Let it play out. No need to place any stop. There is no stop. There is no management also. Some people suggest managing the trade. No, in my Q technique, because my max reward is much more than max risk. In a few cases, if I take the full loss, it is okay. And even if I take 80% of the max profit as my profit, that is also okay. So I'm filling it at mid price, putting a GTC order immediately for 80% of max profit, and watching it once it hits 50% of max profit. If it continues to go up, good for me. Time decay is in my favor, delta is in my favor, volatility is neutral for practical purposes, vega is neutral, and if it stops after hitting 50% of max profit, I book profit. That is how you may identify lucrative, I think lucrative options verticals, and I prefer this over naked calls because we don't have to worry about time decay, don't have to worry about volatility being against us. Easy to find such trades. If you went through the other stocks, the entire list, you would find every day, almost every, even today I could find several ideas, and I might have placed the buying order already on my trading platform at a limit price, mid price. You might play around with it if you have not done that before. Again, no need to know too much of theory, that will not help you in making profit. The technique is more important. Play around with it, take a few trades and see if it is working for you. I think you will start to like it. Remember, one very big advantage is that you don't have to worry about getting stopped out. time is in your favor. Even if it goes down and then comes back up, you will still make the profit target. We are at 1 hour point. I demonstrated two things today. One is how to use the memory trendline support to anticipate and take trades right at the lowest point. Another is how you can use Q techniques, not theory, but Q techniques to structure options call verticals. You might use the same technique for put verticals when the market is bearish. We crossed 1 hour time. Let's end today's session here. Thanks a lot for joining. I look forward to seeing you in our next session, which will be probably during the weekend. I'll announce the time on my Twitter page. Thanks once again for joining. Keep safe and trade profitably.